Guys, fairbinaryoptions.com here, and we are looking at the euro US dollar. Now it is time for the euro US dollar. So we are looking for the euro US dollar. As you can see, this is the 1 hour chart, but zoomed out as much as possible in order to see as many candles as possible, as the move here resembles with an ABC that is completed. Now this ABC, I would say, that goes with this being wave A, as you can see here. So this will be, let's say, a wave A of a bigger degree to be done there, like this. Then of course a B wave, and this B wave should go to the upside, but it's not done with the highs there. But with this, as you can see, we have a contracting triangle there, and that contracting triangle acts as a reversal pattern. Why as a reversal pattern? Because price goes and does something like this, and price basically goes and tries for the upside, fails, and then breaks to the downside. So it breaks into the opposite direction that the original direction entered, and then we're looking for a fifth wave structure to the downside. And this fifth wave structure to the downside seems to be done here with 1, 2, 3, 4, and 5. And this is being called a first wave impulsive move for the C wave to be done around this current level. Now if this is an ABC, you might ask me, okay, so I agree this is an ABC, but what it does, what it corrects? Well, it corrects an impulsive move that ends with these highs here. This should be labeled as an impulsive move. This should be the fifth wave of this degree, and that would be our fifth wave there. So fifth wave up, 5 waves up, and then A, B, C. Excellent. If this is a fifth wave, what would be the fourth wave? Well, the fourth wave ends by the time we have another contracting triangle here, if you look, in the form of A, B, C, D, E. That is the contracting triangle. And if you look at it like this, that would be the end of the fourth wave. So our fourth wave ends just before this spike higher, and if the fourth wave ends there, then where should be the third wave? Well, definitely the third wave is here. And if the third wave is there, when it should be the beginning of the third or the end of the second wave? I would say that our second wave ends right around here, and that would make, of course, let me edit it, so this would be the second wave, and that would make, of course, that the first wave ends at this high, and for the second wave to have a complex corrective wave, basically coming in the form of a flat, A, B, C for the flat. So that makes the impulsive move to the upside to start here. And because of the fact that we already have an ABC here, ABC here, we would say that if this is a fifth wave of a bigger degree to the upside, then this ABC will be only part of a wave A of a bigger degree, and we still need to go something like 61.8 minimum to the upside because we have a three-way structure. But if this is only a first wave of a bigger degree, then we should be careful enough here for price not to make a new high. In both cases, we are in a win-win situation, in the sense that price should go to the upside, and therefore the thing to do is to buy call options, as we are trading here binary options. So we are buying call options based on this. Expiration date will be end of day-to-day expiration date, and we still have the FOMC minutes to come out of the United States, and we based on them to be a bit bearish on the US dollar. I mean, we had the ADP private payrolls today. We also are going to have the NFP on Friday. We're going to have the ECB tomorrow. But in the end, price action is the one that matters, and technical analysis, and therefore we want to buy. So buying call options with end of day expiration date today. End of day expiration date means 21 GMT by the time New York markets are going to be closed, and this is what we are doing on the euro US dollar. Basically, we counted the 5 ways up and 3 ways down on this on this time frame, on the 1 hour chart, starting with this moment, with that moment of time. Why with that moment of time? Because that would imply that the previous move to the downside was having an impulsive move with a fifth wave failure, or a zigzag that ended as a truncated zigzag. But that's another story. We are looking what's on the right side. So it depends very much. If this is a first wave here, then we're looking for a second wave and then for price to break higher. Or if this is only the end of the fifth wave of a bigger degree, we still look for something like minimum 61.8 to come. All in all, higher values to come, and therefore we are buying call options. When you buy call options, you look for price to be higher at the expiration date than your striking price. And when you buy put options, you look for price to be lower than your striking price. Thank you very much for being here. This is fairbinaryoptions.com. Thank you for being with us. And all these analyses are possible due to the help of Lionknife. So make sure you are checking lionknife.com and all the offers that we have there. Until next time, bye-bye.